It's 90 minutes before the open on the last trading day of the year. 2021 has been an incredible year. I sense that many of you have learned from my videos on YouTube. And let me start off by saying thank you. I've had an overwhelming response from many of you to help me with the project that I'm going to be undertaking in 2022. I'm going back and looking at all of my videos and pulling out those nuggets of trading information so that I can caption those videos, edit them, and repost them. I do still need some help on the editing side, so if you have that skill set, please look for my email address in the description area of today's video. Reach me, and I think that we're going to have a lot of people to help us go back and look. I don't even know what gems we might be able to pull out from 2 or 3 years ago. So, in any event, thank you so much. I will be reaching all of you by email this weekend. I'll personally send you an email because many of you wrote me a pretty lengthy description of your trading background. So, lots of exciting things happening in the year ahead. Let's take a look at how the market is shaping up. Now, I'm not a huge fan of trying to predict what the market is going to be doing in 2022 because I am a short term trader. All of my analysis really happens inside of a month. So I don't really care. I kind of go with the flow. I look at price action, I evaluate that price action. It tells me where the market's going to go. I follow those breadcrumbs, I follow the smart money, and I don't really need to put a annual market forecast out there. I'll tell you what I see shaping up and some of the issues, but first let's take a look at the pick that I gave you Wednesday morning. Before the open, Wednesday, my pick of the day was SFM. And here's the stock. You can see orange line above zero right from the open. Around 29.50, stock opens and it relentlessly rallies. Fantastic relative strength, orange line above zero. Excellent volume, upward sloping trend line, breach to the downside. Take your gains. That was about a nice $1 winner on a $30 stock. So an excellent pick. I'm not going to give you a repeat performance today because it's the last trading day of the year. Going to be very, very light volume. We'll probably be trapped in a tight trading range today. Choppy, choppy, choppy. I will show you some stocks that I think could move either way. We don't know yet, but we'll go through that in just a second. If I look at a monthly chart on the S&P 500, you can see how we had this upward sloping trend line that actually touched in a number of different places. This is a monthly chart, and you can also notice how the S&P 500 has actually gone parabolic since that low from March, April 2020 after COVID. We get this big drop, and look at the rally that we've had since then. Let's go into a daily chart. This, by the way, typically is a buying climax when you see that type of liftoff and that type of price pattern. So, am I saying go out and buy puts in 2022? No. We need lots of technical confirmation. The one thing I will tell you is that bull markets like this die hard. So, in the initial phases of any type of retracement, it's going to be 3 steps down, 2 steps back, 3 steps down, 2 steps back, until finally you start breaking some major technical support levels. Then the buyers start to throw in the towel. Then you start to see some accelerated price movement to the downside. But until then, you don't short this market. Anybody that's tried to short this market has been carried out in a body bag. Not a good idea. Every dip to a major moving average has been a buy. Every dip to a major moving average has been a buy. This is where you want to be doing your swing trading. Yes, lots of choppy volatility in here. I don't like doing swing trades here. I don't like doing swing trades here because the market is choppy. Well, Pete, can't you just sell some call spreads up here? Sure, I can. Whoosh, see you later. No, I don't want to be doing that. When the market is strong like this and you've got a long term uptrend, zoom out very quickly, long term uptrend, those dips are buying opportunities. That is what you have to be doing if you are a swing trader. You could actually have a very easy strategy, which is Dip, sell bullish put spreads. Tick, 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 tick. They expire worthless. Dip, sell bullish put spreads. Tick, 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 tick. Dip, sell bullish put spreads. Sell bullish put spreads. Sell bullish put spreads. If that were your only strategy, you can see how about every month, maybe 6 weeks, you will get your opportunity if you are patient. These dips, that's what you need to wait for until we start going in a sideways range for maybe 5 months, 6 months, really start testing the lower end of that trading range. Typically, a strong bull market like this is not just going to roll over. First, you're going to get into a trading channel, horizontal range. Then you will eventually roll over. We could be a year or two away from seeing that type of price action. I don't know. I do know that the Fed has its foot on the gas pedal, and it's going to be very, very hard to get them to tighten. Now, they've already said that in 2022, they're going to tighten 3 times. That is up from 0 just in September. Inflation is running hot, and that's a concern of theirs, and it is more persistent. So we need to expect market volatility like this. We haven't seen these type of frequent drops, and the size of these drops are getting deeper and deeper. So that's a sign that there's some selling pressure. That's a sign that there's some selling pressure. Sign that there's some selling pressure. There are some tells out there right now that tell me the market is hitting resistance. Also, November and December, seasonally, very, very strong months. And I'd mentioned to you why this anomaly exists. It's because asset managers have disincentive to sell stocks. They want those stocks to mark at the high of the year because then they have more assets under management and their bonus checks are fatter because they get paid on a percentage of assets under management. So that's why you have Santa Claus rally. But we also know that when we get rallies to a new high and tight, tight, tight little compressions, tight bodied little candles like this, and when that rally comes on very light volume like this, those gains can easily be stripped away. Where might I have other instances of that happening? Well, how about here? Nice rally, very light volume, tiny bodied little candles. Wham! Hmm, nice little rally, new relative high. Everything looks great. Tiny little bodied candles, light volume. Wham! Yes, I think that we can expect to see some retracement in the next couple of weeks. When I show you the stocks that rallied yesterday, I think it's going to drive home a completely different point, but it's kind of an indicator when the market is getting a little bit toppy because it lacks leadership. So I would tread very cautiously in the beginning of January. January is typically a bullish month, so don't get overly concerned. If you're a swing trader, you should be doing nothing up here. Well, why not? Because you should be waiting for this. You should be waiting for this. That's when you can get active. No matter what your swing trading strategy is, this is where you want to be active. This is where you want to be passive. So that's your roadmap for 2022. Now let's take a look and see what moved yesterday. See if we can find anything that might be worth trading today. Keep your size super, super small. I'm trading a quarter of my normal size. It's traditional for me to be flat at the end of the year. It gives me a very clean starting point for the new year. It's just something I personally like to do. New year, clean start. That's just my own personality. So I'm not going to be trading much. I'm flat right now as we speak, and I'll see if I can find a couple of day trading opportunities. Let's go into the daily chart and let's take a look at some stocks that were in heavy buying yesterday. BABA. Oh, sweet. Nice, big, long, bullish, engulfing candle. Mind you, Last trading day of the year, we're going to see some window dressing. This is when portfolio managers go in and they start dressing up their portfolio because everybody's going to see that in the year-end statement. So we've got downward sloping trend line, breach to the upside, long green candle. What's wrong with this chart? Well, you know from everything that I've told you that lower right-hand corner, these are the stocks that you want to short. Well, they are unloved. They are laggards. Typically, in the final phases of a market rally, the laggards are going to show some strength. I call that the dogs are barking. And that is another tell that this might be some resistance and that we might see some weakness in January. Got to go back because there's another tell. You know how relative strength helps us find stocks that are super, super strong? And we can see that the bid is so strong that the stock can't sell off when the market does. Okay, that's the tell. Market down, 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 stock up, up, up. Well, here's another tell. When you get this type of price action in November and December, typically super strong months. Not this year. That's a tell to me. That is a sign that there could be some profit taking ahead. So let's go back to Alibaba and I'll finish this point. These are not the stocks that you want to be out there buying and swing trading. Could Alibaba open higher today? Sure, it could. But it's just a matter of time until the sellers come back. Let's zoom out. That is a nasty, weak chart. There is no reason to be in there buying Alibaba for a swing trade because you're just playing Russian roulette, waiting for those sellers to come back. And yes, there will be some short covering, and then wham, they take out the low, and now you're trapped in that trade. So if we go through all the stocks that were on the list yesterday, NIO, another Chinese stock, which incidentally, yesterday we nailed it, just killed it. Day trading, keyword, day trading these stocks because we could see early on that they were stacking long green candles. Well, what does that mean? That is when you are stacking long green candles. And you've heard it in my videos before on what? Heavy volume. Ooh, that validates this move. Long green candles closing on their high, little to no overlap, super powerful move. This is what I call buying stupid. Because if you look at this, you're not going to be able to buy these stocks. It's very uncomfortable for most people to buy these stocks. It certainly was for me for a very, very long time until I realized how powerful this pattern is. When you see these stacked candles like this, buy. You don't have to buy all at once. You could buy some, then you get another confirmation here, higher lows. Okay, I'll add some more. Here we go. Oh, this will be the pullback. Let's see how far it pulls back. And when you don't get much of a retracement in here, and you hold against, what does that tell you anyway? That tells you that the normal temptation to take profits right here is being offset by incredible buying pressure. So profit takers, no, buyers are still there. Profit takers, buyers are still there. Profit takers, no, buyers are still there. When you get a compression like this, very little retracement down, you know this thing is getting ready for liftoff. See you later. So this is a pattern that you should always be looking for, whether it's in the S&P 500, whether it's in individual stocks. Long green candles stacked consecutively with little to no overlap on heavy volume. That is a money pattern that you should be trying to take advantage of as much as possible in 2022. But if we zoom out, nice long green candle, bullish engulfing candle. Is this the low? Is this the best buying opportunity ever for NIO? No, this is just some window dressing and this is money rotating out of the big cap stocks that have made lots of money this year, taking some gains there and putting them into some of these laggards to do some window dressing. Just a matter of time until that low is tested again. Now, if NIO starts making a series of higher lows after 3 or 4 weeks from now, okay, now we start getting through this horizontal resistance level, we start getting through some major moving averages, then you can start to trade that stock on a swing basis from the long side. But until then, this bottoming process still has to continue. It has to show me that the stock is ready to go. KWeb, same deal. Big sell-off, bullish engulf. These are all laggards. Look, these are at the top of the list. These were the stocks that were moving yesterday. So I'm going to be watching these stocks. I'm going to see if there's an opportunity to short them today, if some of that fast money has run its course and now they're going to leak oil and head right back down, or maybe we get another leg higher today. I won't know until the price action today starts to unfold. I only know that I'm expecting a very light volume day. So I'm going to go with NIO because it has fantastic option liquidity. It had a huge long green bar yesterday. That tells me that it's going to do one or two things today. The fact that it would just sit here today, right where it closed yesterday, is unlikely. It's either going to give back some of those gains, perhaps down to the middle of this long green candle, or it's going to try and rally up and get up to this $35 level. So keep an eye on NIO, see if it presents you with some opportunities on either side today. Keep your trading to a minimum, keep your powder dry. I don't like what I see in the market here. We had a little bit of a market drop yesterday, nothing too daunting, but that was a pretty heavy round of selling that we got late in the day. And I believe that the S&P is down about 8 points today, this morning before the open. So we're going to see a little bit more retracement this morning on the open. Ideally, wait for support to form. I still prefer to trade the long side. I still feel that there is some year-end strength out there. Wait for that support to be confirmed. See if you can find a few trades. Again, thank you so much for all of your support this year. If you're interested in helping me edit some of the old videos, please reach out to me. I will be sending emails out to each and every one of you this weekend. Happy New Year. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.